Please remember, I'm saying this so you be informed because at the end of the day, what's very, very important is you make an informed decision with your money and your investments. We can't control what's going to happen with the cure. We can't control that, but we can control how we deploy our capital based on the information that we know. Okay guys, so it's July 2020. This video is being filmed at the start of the second week of July, and I want to give you an update on what's going on. And a lot of you guys have been asking where will the stock market be next year, and that's what I want to drill on for this video. I want to talk about certain conditions, certain things that you could actually look at if you are investing in the stock market and want to know the underlying things that will happen. But before I give you and lay the foundation to everything, please do note this. No one has a crystal ball to know where the market will be. No one can forecast, predict, guess where the market will be. When people say that the market will be here by this time, I don't normally listen to that because no one could guess it. No one can speculate where it will be and be accurate about it, that at this given point in time the market will be at this price. Please remember this. Short term, market moves via emotion. Emotions are triggered via news, and news also would push supply and demand. So, what does that mean? It's July 2020. You don't know what the news item will be by July 2021. You don't know what the news item will be by July 2022. We don't even know what's gonna happen with the coronavirus. We don't even know if there might be another virus at that time. We don't know what will be the world economy at that time also. That's why I love fundamentals. That's why I love technicals, because technicals allow me to see where the trend is. Technicals also allow me to see where the range is, and fundamentals allow me to see certain things in the economy, certain things from valuation, certain things also from a fundamental perspective, whether the company that I'm buying is well or not so well, it's bad or not so bad, which will give me a decision whether to buy if I have cash or to avoid if I don't have cash. Or if I own the stock, it will give me also a rationale. Should I sell it or should I still hold on to my position? Because please remember this, the ultimate thing that people need to consider, and I've been saying this in a lot of the videos that I've been making, is risk management. That's the most important thing you have to consider. But again, for this video, let's drill down, let's talk about it, and let's continue. So if you're excited, comment below, I'm excited. Comment below, I want to know more. Comment below, laban lang, invest lang tayo. By the time I'm making this video, in the Philippines, there's around 46,000 coronavirus infections already. Please remember, when they did the lockdown last March, we barely had around 100. It was at that number. So from March to where we are right now, we have around 46,000 infections in the Philippines. We have, I think, 11.3 million infections already around the world. Again, US, Brazil, and now India is number 3 in terms of ranking of coronavirus infections. Here's one thing I do know. Around August, they will announce the second quarter GDP results. And when the results come out, they will just confirm everything that we've been talking about for the second quarter of the year. That we will be in a recession. For those who have not watched my other videos, I've talked about that a recession is basically 2 quarters of negative GDP. And since we already had a negative GDP for the first quarter of the year, which only factored 2 weeks of the lockdown, and we had virtually the entire second quarter under community quarantine, regardless if it's ECQ, MECQ, GCQ, the economy wasn't firing on all cylinders. It wasn't where it was in 2019. So that being said, I really believe this, that the GDP for the second quarter of the year will be worse than what the GDP for the first quarter of the year was. So if the GDP for the first quarter of the year was negative, there's a big chance that it will still be negative for the second quarter, confirming that we are in a recession. What I do not know is how will we be in the third quarter and how will we be in the fourth quarter this year, because again, at the third quarter, July, right now, things are starting to slowly open up. Restaurants are starting to accept people, but the underlying thing that we don't know is this. Since the coronavirus infections are increasing, do we have enough capacity to be able to hold? As the infections start to increase, we still go on with our normal life, we still go on with work, we still go on with going out, buying groceries, eating at restaurants, but following social distancing? Or will there be a lockdown again? I'm not sure if having another lockdown will be something that will be good for us. That's something I'm not so sure is something that's good. But here's my take in this, and I've been consistent in saying this over and over. I think still, even at GCQ, two of the largest sectors, or at least businesses connected to these things, will be still hit. Tourism, it still will be massively hit. I don't think that people will travel a lot given that there are certain restrictions until the virus is contained, until there will be a cure, or until there will be a vaccine. I think what some of the local governments are doing, that there will be some sort of bubble-like conditions, that there will be local tourism in a particular area. That may work, especially if that area does not have any virus anymore, or infections are very, very minimal, similar to what they did to Western Australia. The entire area where Perth is does not have any coronavirus infections. If there is, I don't know, it might be very, very minimal. But the thing about that is they created a bubble in that area that people can go in or out, but it made them protected from the infections. So if there will be any tourism, most likely it will be local tourism, and you won't really see a lot of foreign travelers, foreign tourists coming in and out of the country. You won't really see Boracay, El Nido be in tip-top shape where there's a lot of foreigners there. In the same way, also, since I mentioned that tourism won't be strong, majority of the hotels, resorts, airlines, tour companies, travel companies, tour operators that are pretty much connected to tourism will be hit. In the same way, restaurants, tourist activities connected to all of those resorts, hotels, won't be getting a lot of upside, won't be getting a lot of earnings. It will be back, but again, not at the level of where we were in 2019. Not until we have a vaccine, not until we have a cure. So tourism. Another one that will get hit, mass gatherings. And please remember, I'm saying this so you be informed, because at the end of the day, what's very, very important is you make an informed decision with your money and your investments. We can't control what's going to happen with the cure. We can't control that, but we can control how we deploy our capital based on the information that we know. Now, in the same way, mass gatherings will be hit. Large weddings, expos, conventions, concerts, basketball games, churches, rallies, etc. That if you go to a basketball game, it's not just people renting the basketball. It's not just the lights. It's not just the referees, the basketball players, the water boys, people who would buy the Gatorades that they would use, people who would eat snacks, the people who are working those snack stands. So there's a large effect in the economy when those things happen. Ganun din sa conventions. Until all is said and done, it won't be in the degree that you will see 20,000 people, 30,000 people grouping together. That's why, in the same way, the Tokyo Olympics. Before I go with some key things you need to watch out for, if you guys are learning from this and you're still staying, and this is something that's still interesting to you, comment, I'm staying, comment, I'm learning, comment, I want more. Anyways, let's continue. From a technical analysis perspective, you're seeing the chart right here. As you start looking at the chart, a couple of things that I'm showing you. Number one, you're seeing this upward push, this upward trend that started since the bottom of the March run. It developed a higher high, higher low, higher high, higher low. It's still pushing. But one key ingredient that it must break for this upward push to continue to progress is a 6,588 resistance level. I repeat, 6,588 resistance level. As you can see, the horizontal line that I drew there. If we want to see the market push up from a technical analysis perspective, it must break the 6,588 level. I repeat, it must break the 6,588 level, and it must push and even break past the 7,000 level way after that also. But we're not yet there. We're not even close to the 7,000 level yet. We must break the 6,588 level, and from a short-term perspective, we're seeing the market start to consolidate from around 6,1 to 6,588. But long-term, or at least from from a reversal standpoint from the drop in March, we are seeing the market start to make its own counter uptrend. But for this to be legit, it must break, as of this video, 6588. After we break 6588, after we hold 6588, allow me to make you a new update on that. But we're still not yet there. So please remember that. Please keep that in mind. Please write it down. 6588. Comment below 6588 kung nalaman nyo to. Para yung mga iba tinitignan yung comments, ano yung 6588 na yan? Here are 10 things you need to know, or things that you need to watch out for, which could trigger either buying or selling, which could be indicators for you whether the economy is getting better, or is it getting worse, or spending is getting worse, or what's happening to the economy. Is it something that's deteriorating, or it's something that's getting better? Now, GDP results. I already mentioned that it's going to be negative. But what I want you to consider and what I want you to look at, will the GDP results be worse than what people are expecting? Or is it bad but not as bad as what people are expecting? Because if people are expecting, for example, -5 and we get -10 GDP, then it could trigger the markets to go even lower. But if everyone's expecting -5 and we get -2, then it's negative, it's bad, but it's not as worse as what people are thinking. Then it could trigger some buyers to start to come in, because people are suddenly thinking that, hey, it's negative, but it's not as worse as what everyone else is thinking. Number 2, second quarter earnings. Are we worse off than what everyone else is looking at, everyone else is thinking? Heavily connected also to the GDP, but heavily dependent on the sector that you're investing on, or heavily dependent on the company that you're actually watching. Meaning, is the bank that you're watching, is it second quarter earnings worse off than what everyone else thinks? If it's worse off than what everyone else thinks, then expect the stock might go even lower. Or if it does better, it outperforms at what everyone else thinks, it might consolidate, or we might see a push-up. So first one, second quarter GDP results. Second is second quarter earnings of corporations. Next, I posted this in several videos that our unemployment hit a massive high, one of the highest unemployment rates we have not seen in a very, very long time, or if I think in our history. What do you watch out for? Will unemployment continue to rise? Because if it rises, then it's bad. As you all know, we are a consumption-driven economy. If people don't have jobs, they will spend less. If they spend less, then lesser wheels will turn in our economy. So look at unemployment. If it rises above that 17% level, then there's a bigger expectation that we're in deeper trouble. But from 17% you see it go lower, it means that as the economy starts to open, or companies starts to open, or businesses start to open again in lesser capacity, some of those people who lost their jobs suddenly have jobs again. Next, number 4. One thing that I mentioned that could help stimulate the economy is government spending. What I want to see is how massive government spending will be, especially in the second half of the year, how massive they will spend, especially for build, because it's one component of the GDP that, if it's done right, it could contribute a large chunk to it, especially if household consumption is lower, especially if exports and imports are not where it was in 2019. What the government can control is its spending, and particularly for infrastructure. And what's nice about infrastructure, if they build, they construct, especially if it's a highway, especially if it's a road, it's open air, hindi siya kulog, they can still do social distancing, and they can stimulate the economy when all is said and done. That's number 4. Number 5. Comment number 5 if you are in number 5, if you're still with me. Another thing that I'd look out for is remittances. How big is the drop? How many people will lose jobs? The worst case scenario that I've seen is that they're projecting remittances to drop by 20%. And as you all know, if it's remittances, that means that OFW, that Filipino abroad who used to have a job, doesn't have a job also, meaning that they're contributing, and now some of them might have to come back home, and instead of them being a net positive, adding to our economy, they're now consuming. Those remittances contribute to the ones buying at malls, the ones spending, the ones buying fast food, the ones eating in restaurants, the ones buying cars, the ones buying condos. So how big this drops will have a ripple effect also in our economy. Number 6, we need to watch out for interest rates. We mentioned it in previous videos that to protect the economy, the BSP tried to drop interest rates so that when businesses who need cash will borrow, the burden for them to pay the rates won't be as high. Or if they want to take advantage of this opportunity or to salvage this, because rates are low, they might take out a loan, and in essence, they might be able to pivot their company around or also do better. But here's the thing also I want you to look at. Are businesses actually borrowing? Because if they're seeing that, hey, the economy may not be as good, may not be as attractive, may not be as robust as what we think it is, they might not be also borrowing. And in essence, if they're not borrowing a lot, there's not a large amount of borrowing, even though there's a lot of liquidity or even though interest rates are lower, banks may not earn as much. In the same way, number 7, BSP also dropped interest rates so that those that want to buy cars or those that want to buy condos, there's a shot that rates will be lower for them when they borrow. Or in the same way, also, those that leave their money in time deposits or fixed income will be forced to take it out and invest it so that there will be more opportunities in the country. But that being said, with uncertainty, some people may want to hold on to their cash, meaning okay lang siguro kahit hindi masyado to kumita, pero at least safe siya kaysa magkaroon ng decline. I'll just leave it in the bank even if I have lower rates of return. In the same way, you can also expect that I don't know what my job will be. My business is not so strong or things are not so good. Okay pa naman yung kotse ko, hindi muna ako mag-upgrade this year. Or for some people, sige, okay pa naman kami sa condo namin this year. Why upgrade to another one? So that's what I'm saying. The rates are low, but are people actually taking it? So you need to watch that out also because at the end of the day, banks make a lot of money from their loans. So more people taking loans, more businesses taking loans, banks have larger amounts of money. If they don't take loans, then banks are hit. Number 8, non-performing loans. This is the ratio of the borrowing and then default to make it simple for those that don't know what it is. For the longest time, NPLs, non-performing loans, were so low. It was so down. We've hit historic lows. But the question is, there are OFWs who lost jobs, there are people who lost businesses, there are people who lost income. How big of a proportion of those that lost revenue will be able to pay for their loans? Either business owners, car owners, people who got personal loans, or people also who bought houses, condos, etc. So watch out for that, how big of a spike it will be, because if it's not much, then we're okay. But if it's bad, again, it doesn't cause a lot of buying optimism if the economy is bad. Number 9, same thing as what I've mentioned. Restaurants are open, 50% of the economy is starting to open already. But again, of course, you still have movie houses, etc. closed in malls. But if restaurants are open, are people really eating out? Are people really dining out? Are people really going to the coffee shops to matambay? Are people really still going to malls? Is it life as usual? Is it the same as what we see it to be? Because if it's not consumption-driven economy, if people are spending less, those restaurants are not earning more. Those restaurants are not earning more. They might not need to employ a lot of people. They might not need to have a lot of shifts. They might not be expanding. And it hits the broad and general economy. I'd look at it. I try to see, open na. Are more people going out? Because if there's more people going out, then again, we get to revitalize the economy. If more people are still at home, not going out, then hey, the economy might be hit. Lastly, number 10. Comment below if you stayed. Sabi mo, put it in the comment section, I stayed up until 10. Parang awa nyo na, please support me. Anyways, joke lang. Number 10, e-commerce. There's a lot of pivots going on. People ordering via Viber, people ordering online, people ordering via app. And money is shifted online. Money is shifted e-commerce. Money is shifted to anything on top of the internet. How big of a proportion is this? And is it enough to offshoot some of the retail expenses or some of the earnings from retail establishments na nawala? Because if it's a large chunk, then we're good. Because it also helps small and medium entrepreneurs, which in turn, if they get help, they get to spend, and then it makes the wheels turn. So those are the things that I want you to watch out for: second quarter GDP, second quarter corporate earnings, unemployment, bill/government spending, remittances. Is there a lot of businesses borrowing? Is there a lot of individuals borrowing? Number 7, in line with getting houses, personal loans, and cars. 8, non-performing loans. 9, restaurants, malls, and general consumption. Number 10, e-commerce. Comment below if you're learning. Comment if this is helping you. Comment if this is something that's giving you also more information. Kasi hindi naman natin kailangan kabahan. Hindi naman natin kailangan matakot. Hindi naman natin kailangan na when everyone's scared, matatakot ka na rin. No. You base everything from information. You base everything from data, because knowing all of these things will allow you how to position. Knowing all of these things will allow you to know that, hey, I think things are recovering already. Things are not that bad. Please remember, everything you see in the news, everything you see in social media, majority of it is negative. So if you get influenced by that, you will act according to that as well. And what I want to submit to you is, as an investor, you have to look beyond the narrative. You have to look beyond the news. You have to look beyond the noise. You have to rely on data, and you have to analyze that data in accordance to your skill set and strategy. And then that's when you start deploying capital. The whole goal of this, for me, is to give you as much context as possible. The whole goal of this, that's why I keep making videos about this, is to keep you informed, because I really believe in the world of information, those that know how to sift through the noise and the data are the ones that will win. Please do note, I mentioned that the economy is not as good as where it was before, but it does not mean you cannot thrive. It does not mean you cannot make money. Do not concern yourself with things that you cannot control. Concern yourself with things that you can control. You cannot control how the economy will be. You cannot control how the market will be. But you can control how you position. You can control how you can time. You can control how you can select your stocks. You can control how you avoid bad stocks. You can control how you buy the good ones. You can control the ones that are still thriving and doing well in this economy. You can control the time that you buy. You can control the time that you cut. You can control the time that you take profits. We may not control the market, we may not control the economy, but we control the way we trade. We control the way we make money. And the reason why I'm saying this, it's time that we stop blaming everyone else around us but ourselves. It's time that we take full responsibility that it's our money, it's our responsibility, it has to be us right here, right now. We'll grab control, we'll take control of our financial future. That's why I'm doing everything that I can. I'm doing my best to educate you so that you know what to do. So you're not running and moving and deciding in fear, but you're running, moving, and deciding based on your strategy and based on your plan. And I hope that this helps you. And I've been saying this over and over and over and over, that you will win when you don't wait for the economy to get better, but you will win when you decide on your own that regardless of what you see around you, you will keep on pushing, you will keep on hustling, you will just keep on moving forward, because those who move forward are the ones that will win. Those who move forward regardless of what they see are the ones that will be financially free. And I keep saying this all the time, financial freedom is not that easy, because if it was easy, everyone would be financially free. That's why you hustle, that's why you push, that's why you don't care about what the noise is around you. That's why you keep on chugging, you keep on doing, you keep on running your own race regardless of what you see. And I hope this is something that helped you. I hope this is something that inspired you. I hope this is something that pushed you to take your career, to take your business, to take your finances, to take your stock investing to the next level. Do not let this crisis destroy you. Do not let this crisis make you lose. Make this crisis, use this crisis to turn yourself around, to make things better for you, because you are a winner. You are a born winner. You have so much potential in you, and don't just waste that. Don't just allow it to be potential. Allow it to be something that will cause you and elevate you higher. So that's it for now. Marvin Germo. If you're new to this, appreciate it if you can like, subscribe, smash the bell so that you get updated every time I come up with new content. And if you could share this around, share positive vibes, share right information to people. We really need this. So if you want more of this content, appreciate it if you could also subscribe to my channel. And there, links below. I have books, I have seminars. My second channel is also in the description. I have a Patreon account. I have, for those who want to invest in local stocks, local mutual funds, international stocks, links are all in the description below. And I hope that you stayed up until the end. I hope that this is something that's not just informative, but I really hope that this is something also that's inspirational for all of you. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you.